On this video, I'm going to show you how to draw supply and demand levels in a very consistent and mechanical way, which is essential for our way of thinking, like a robot. You have to trade like a robot, do always the same thing in order to achieve the same results over and over and over. So, in order to understand how to draw levels, you need to understand which are the components of each of the two levels that we have. A supply zone or level and a demand level. Both are composed of the same things. I mean, one distal line and one proximal line. The proximal line is the line farther away from current price. If this is the current price for given forex pair or any other instrument, the proximal line is the lowest part of the rectangle, the closest price to current price. It is always the same. For a demand level will be here, for a supply level will be here. And then we have the distal line, which is the line farther away from current price, which is the high of the rectangle for a supply zone and the low of the rectangle for a demand zone. So knowing that, I will show you how to draw these levels in a consistent mechanical way on the charts. But before doing that, let me describe you what a good base is, because the base and the departure is essential for a level. A level normally is composed by three blocks. I mean, one leg down, okay, like this, one leg down, we call it leg, a base, and then another leg. The outgoing leg is the rally, in this case for a demand level, is the most important, the departure, okay? It's always the second leg. For a supply level like this is the first leg, the up, okay, up to the upside, leg up, base, and then drop. This is the first leg, base, and the second leg. This is the first leg, base, and second leg, base, second leg, okay? So by knowing that we have two legs and a base, the features of a good supply or demand level, what they must have is a maximum of 4 to 6 candles in the base, no matter which time frame. It doesn't matter if it is a 1 hour, a monthly, a weekly, or a 1 minute time frame. Maximum 4 to 6 candles at the base. Okay? This is the base. Maximum 4 to 6 candles in order to validate a level. Otherwise, it will be negated as a level. We want tight candles with bodies which are more or less equal or lower than 50% of the candle range. You may be asking, what is a candle range? A candle range is, if we take, for example, this candle, okay, the high is here, the low is here, open and close. So the whole range is from the high to the low. So this is a whole range. Now this is a whole range. So each candle, I mean the whole candle, from the top to the bottom, that's the whole range. So if it is lower than 50%, the body from the open to the close is lower than 50% more or less, okay? It doesn't have to be that. But more or less, that should be the base, okay? And we want maximum 4 to 6 candles, maximum 6. So we want also on the second leg, I'll say here, second leg, the impulse, okay, we want at least 2 ERC extended range candles closing at its high or near its high, which is about 80% of the whole candle range. So again, if we look at the chart, we want that the candles where that rally, the second leg in the case of this demand area, we want that it closes at almost 80% of the candle high. So this one closes, for example, this one closes as well. So we have like 2 candles, 2 or more 3 candles. This one, for example, we have it closes at around 80% or something like that here as well. So it just has to stand out. I mean, this stands out. You see, this is the leg stands out. We have an imbalance there. We have an imbalance here and here and here. You see here, big imbalance. So here. So it just has to stand out. Okay, long extended range candles, at least 2. We have a couple of exceptions on the engulf patterns, and we will look at it now. And when we are trading CP patterns, continuity patterns, many times that rule will be broken because we at the CP patterns we have Marubosu candles, which are tight candles, small candles range, small range candles. So that's an exception. I will show you a few examples. The continuation patterns are really good for when we are trading with a trend, so we need to be aware of these exceptions because they are really great patterns to trade long or short out. What we do not consider as a base, as a good base, we don't even have to draw it, okay, is our bases that have only a single doji candle as a base, and only doji candles, more than one candle at a time at a base. If we don't have a small range candle or spin top candle or tight candles there, we don't want to consider that base as valid. We don't have to have a base with more than six candles. It's the same rule here. If this is a minimum, of course this is a maximum. And we don't want wiki candles, long tails or wicks. They are normally reaction to previous levels. So when we see a wiki candle or wiki candles at a base, we won't even consider that level. Okay, so departure is key. I mean, the strong departure from a level, this impulsion, this explosion, this is the most important thing for a level. There will be some nuances when we are in at a higher time frame areas where we don't have to see those big impulses because we are very low in the daily curve or the weekly curve. So we will be happy with not such a strong impulses or departures, but we will cover that in other videos, and you will see that with experience. So now that we know all these rules, let's start drawing some levels on the charts. This is the euro-dollar, I think. Yes, the euro-dollar. So we have a first leg here. Let's draw some demand levels because now it's like bullish, this area. So this is a drop, this is a base, and this is a rally. So what we do is we draw a vertical line on the impulsion to draw on the drop, and then we draw another vertical line where we have a candle which is not part of the base. So this candle is part of the base. You see 50%. So this is base. This is the lowest low of the base, and then we have this area over here. So this is a distal line, and this is a proximal line. Okay. So I will draw the level like this. So here we have another small level, which, as you can see over here. Let me remove all this. Will be faster to see. Okay, like that. Okay, so here we have another level. We have, because this is a valley, one of the type of levels that we have for trading supply and demand. This is a valley, a V-shaped level, a swing low. This is good for extremes or for the reversion to the means. Okay, but when the trend is strong and we break previous highs and previous supply areas, many times we have continuation patterns form on the way up in this kind of, because this is demand. So we have this rally, the first leg. We have a base that has to be with the opposite color. Okay, we don't want a doji here. Okay, so this is a rally, a base, and a rally. So this is the base. So the base will be like this, lowest low, this is here, and then for drawing demand proximal lines, which is this one, we want to draw the horizontal line or for the proximal line at the top of the closing candles. Always, if we had like 3, 4, always the closing, the highest close or open, it depends if it is a blue or a red candle. Okay, so always covering that. And then we will cover the lowest low of the area. So this could be the area of demand for this continuation pattern, more or less. Okay. So if we continue to the right, let's look at this one, which is also a continuation pattern. As you can see, this is a rally, this is a base, and this is the rally. So we will draw a vertical line. This is for consistency. Okay. And this is the last candle. This is a candle, a strong candle, because it it is not 50% of the whole kind of range. So there, and this is the other. So this is the low. All these are the opens, the open and the closest. So the highest open close area of the basing candles, that's the area. Okay. We are not taking into account how low we are in the curve. We are just now drawing the levels. Okay. It doesn't matter if it is broken, doesn't work. Okay, because when we are drawing levels, we are just drawing levels. We have to do our multiple time frame analysis in order to assess if this level is good for trading long or not. We don't know what's happening up here. This is not the purpose of this video. Okay, be aware of that. So I will just stick to how to draw levels. Okay, let's remove all this. Okay, now. So let's continue to the right, for example, and here we have another level. So we vertical line on this first leg, another vertical line on the right leg. Okay, you see here, and then let me switch to scale sticks so I can move freely around the charts, and then we will draw always a line covering the whole swing, the lowest low of the basing candle. We don't draw the levels like this. We have to cover the whole area. For a demand level, the lowest low. For a supply level, the highest high, like here. Okay? And now we detect that these two candles are part of the base according to the rules. So we draw the level like this, the highest open or close of all the basing candles. So this is the area. Like that. Okay, this will be a level, but it doesn't. But this is another thing. I mean, we haven't taken out this area, so this could be a potential level, but it is not a level. Let's draw the level, but it wouldn't be a level because we didn't have enough strength to remove this area. But let's draw the level, nevertheless. Okay, this is the impulsion, the first leg. This is the second leg, and then this is the lowest low, and then this is the highest, closest open, and open of basing candles, and this would be the level, like that. Okay, always like that. So let me remove all this, and now I think we have some supply levels to draw. Here it is. So this supply level, see here, like a rally based on a drop. So we would have a level over there. Looks like a sort of speed bump. This could be considered a lot of trading in the area. We need to analyze the high time frames by areas. So many candles in the area is not that interesting, but we're going to draw it anyway. Okay. I just want you to see the difference. So this will be the highs. And this will be the closest. Right. All these areas will be the base, and then this will be the whole area. Okay. Then we continue, and then this area, too much trading in the area. We don't like that, and then we have this. Okay, this is a good one. A rally, a base, and a drop. Supply area. Okay. So we draw a vertical line here. We clone it, and these are the two legs. This first leg, second leg, and then this is the area. Like that. Okay. We don't know what is down here. We will probably have a higher time frame area. That's why it bounced like this. And when we hit an opposing higher time frame demand area, we are not gonna lean on these kind of levels because they are lower probabilities. Higher time frame demand will be in control, so it's not high odds to trade these areas. I don't know what that was there. Let me try and see what happened here. Let me draw a line here and see if we've got some kind of level on daily, weekly, or something like that. Oops. Let me switch it back to non-scale fix. Yeah, so where were we? Let me draw it black because I'm not sure where we are. And then This one black as well. Sorry for this. This is improvised. Let me remove also the indicator. I don't like to have this here. So something like that. I will remove these levels. So now we'll see much clearer where we are. You see? There it is. You see? It dropped. You remove this. This is not valid. Look at this. Price dropped, and where did it drop? Look at this. This is a rally based on a rally, drop based rally. This is a swing, a V-shaped level. Okay? A valley. Look where price hit. This is a clear example of where you don't have to take those levels in the lower time frames. You see? So if you leaned or trusted this level, look at where that level is located. Let me draw it like this, two horizontal lines. This is not the purpose of this video, but I just wanted to show you a real example. See, this is the 1 hour level, so when we hit a higher time frame in my level, we are not allowed to sell anymore there, even though you see a big drop, because this is what normally happens. What normally happens? Can work, maybe, yes, but this is what normally happens. So let's continue. On the 1 hour, for example, we were there. So now we have this, and here we have some levels, like here, rally based on a rally. This is a speed bump. So we would do like this. We don't do like this. We don't cover the highs. We cover the lowest low for demand and then the closest. So this would be the level of, this is a continuation pattern. Okay? And then we have another level here which was not valid because, oh, was it? Because, yes. This one was valid. I took this level, but I think I took this level, I'll show you on the thread, on the 4 hour. Yeah, I took it on the 4 hour, which is the same thing. Yeah. This level was valid for about 1 pip, something like that. Let me show you. Because one of the rules is that we have to remove previous highs in order to validate the level. So this one was like this. I'll show you on the thread. It was a live trade that I took. So this level will be like this. Vertical line. This is impulsion, same base. The two candles are the first leg of the whole base. This is the first leg, okay, and this is the leg up. So the base area, basing area, is the base candle. You see, 50%, and then this is the area. Lowest low, the closing area, closing prices, and then this is the trade. I took this trade. I didn't hold it too long. There was a level over here on the daily. So I just took this one, but well, it's worked really great. But well, it happens. So why did I take this? Because the high, I think this is a demo broker account. I don't know. This is the high, 32.83. This is the high, 32.81.5. So by 0.8 pips. So if you trade like a robot, I do that with my EA. This trade was taken. Okay. Because of that, we need the previous resistance or supply or to be taken out before validating a level. So this could be like this, a potential level, but it wouldn't be validated until we remove this area, and this area was removed right here by 0.7 pips, and this is a trade. Okay, it's all on the thread. This trade I was taking there, with the screenshots out there as well. So here we have this level as well, as you can see. This level, we've got this first leg, the base, and the rally. And then here we have another level. This is the low. These are the closes of those candles, of the opens. The base, this is the open, this is the open close. So this is the basing candles out of this. So here, more or less, there. And we've got a retest on the right. This trade also worked. It was with the trend. Okay, so we have that. And now we've got another type of pattern, which is the continuation pattern. We have seen it a couple of times already. We have a rally, a base, and a rally with a gap. This is the strongest look of a demand area, of a demand level. We've got a first leg, this is the rally, and this is the base, and this is the rally. So we will draw, this is the whole leg, stops here, okay? This is the impulse candle, this is an ERC candle, this is not part of the base. We need tight candles, or 50 with the bodies which are like 50% of the whole candle range. So this is the first, and then this is the second. This could be like a whole candle. The gap is painted like a whole candle. Would be like a whole candle, full candle. Sorry. This is the low, and then this is the open close of basing candles. We wouldn't draw it like this. It depends on the situation, where you are located, and etc. etc. Sometimes price will not reach the level. So if the level is tight, like this one, 12 pips or something like that, I'm happy to do like this. Okay, to cover the whole area, because many times price, well, these areas are so strong. Okay, there were no enough sellers here to fill all the buyers' orders. So many times it will reach this area, something like that, and it will not enter our zone, and it will rally without us. So if these areas are tight, I will draw it like that. Okay, but this is the way that we should draw levels always, in order to be consistent. And now price keeps on rallying and rallying and rallying. Here we've got a level as well. Look at this imbalance over here. Too much trading in the area, and then we've got an fill gap. So even though this level looks great, I don't think I would trade it, because price could normally do like this, drop into this little tiny area, and then here it would bounce, and you would be stopped out right here. Okay, this is too much trading in the area. So here we have other levels. Okay, look at this: drop, base, and a rally, and then drop, base, and a rally. But look that these areas were not removed, so these levels are not valid anymore. They're not valid. I mean, they were potential levels, but I wouldn't even draw them. Okay, the automatic supply and demand level will draw them probably, but you should know that you can't take it, because look at what's happening here. We are at a higher time frame supply area, probably, or very close. Okay, so we need to remove that area, and that doesn't happen until we have removed this. So here we have removed this area, see? And then do we have a level? We had a level over here, but it didn't trigger an entry. Okay, so we have here a rally based on a drop. This is a continuation pattern, so this is the lowest low, and this is the highest, closest, and opens of the basing candles. So that was the level. It didn't trigger anything. This was not a level. Look at this drop. This is nothing. I mean, and the departure is more or less good, but it's nothing. So now look at this. Too much trading in the area. We don't like that. This is the untested. So if anything, if I imagine that I wanted to buy, it will depend on the trend and all that. But I mean, between this and this, I would choose this one. But this one is a reaction to all this, and this is like fresh and original. Well, not original, because I have retest of this one, but it is fresh. But this is like trying to hit this area. It didn't. So if anything, I would trade this in. This monthly, and we have a weekly area like here. Let me delete objects. All objects, delete. And then we've got here, we've got this level of supply on the weekly. So right now, this is the high, this is the base. Because we have this vertical line, this is the biggest, this is the first leg, second leg, this is the whole first leg, second leg, this is the highest high, and this is the candle, the basis. The basing candle. So this is the level. So now we are bouncing off weekly supply. So if we are bouncing from weekly supply area, we shouldn't be allowed to keep on buying. Okay, we should be looking for shorts. So this is the supply area on the weekly, and let me do it like this now. I'm going to drag the rectangle readed indicator like that. So it will extend the level. So now on the 4 hour, For example, we've got this. Remove this. We were in a 1 hour, I think. Yes. Oh, 1 hour. So look at this now. We have weekly. Where's the weekly? It's Friday. I think that I don't have the colors well configured for this background, so I will draw like this. Yeah. So we are in the weekly, you see, from here to there. So this is not high probability to keep on going long. So now we've got all these impulses to the upside, and now we're getting impulses to the downside. So since we are high on in the curve, this could be a possibility for selling here. So this is the high, vertical line, this is the impulse, this is sort of is a CP, a continuation pattern, so a drop, base, and a drop. So this is the level, this is the lowest, closest opens of the candle. See, we don't take these wicks, and then here we are, the level, like that. Okay. This level has got like how many pips? 25 pips, which is not like that big. So there we have that area on the 1 hour. Okay. So this could retest this area and keep on dropping. This is all retested. This is a retest of this, and this. So price could easily drop much lower. And since the trend is like about to change, if this does like this, could be a nice drop from there. But this is an analysis. I'm not doing that now, but well, this is a professional problem I have. I'm always go beyond of my explanations. Sorry. So this is the way it is. We have covered how to draw them. Let me go, for example, to the daily. Let's see the daily. I'll draw levels on the daily as well. It's the same thing. Price is fractal. Let me go to the objects list, and then we'll remove everything here. Okay. So on the daily, look. Here we've got a very clear, we zoom out, we will see the imbalances. Look at this leg down, leg up, and took out this area. So this is a good area. Okay, so we will do like this. Lowest low, good area, but now we will see something. Okay, there. This is the leg down, leg up. These are the bases, and then we've got a level here. This level is fresh, but it is a reaction to these levels. Okay? And we go, how do you know if it is fresh or original? We draw a horizontal line here, and then we see it is a reaction to this area over here. So the whole level will be, this. This is all the base. Something. A base, this is all base. Something like that. No, this will be the level. That daily area is a second retest. This is fresh. It looks good because it removed this area, so this area is strong over here. Okay. Look at this daily continuation pattern over here. It stands out. See, this is the exception I was talking before for the basing right here for the CPs, continuation patterns, because they are made normally of tight range candles, Marubosu candles. Marubosu candles are candles with a tight range candle, small bodies with almost no wicks or tails, or no wicks or tails. So look at this. If you take into account that rule of 50% of the whole candle range, that won't work. But we know that this is a value setup if we are not near a higher time frame than the daily supply area. Okay, so this could be the base, the lowest low, sorry, and the basing. I will draw like this, the whole area, like that, and then like that. And this is the first hit, one hit. Okay, and then it rallied 300 pips. But maybe there was here another level of supply, and then it reacted, and then dropped, and it consumed this area. So on the second retouch, and then we created the second level that we saw before, to which this is the first reaction and second reaction. So now in current time, as you can see, we have this. We have this level of supply on the euro, on the daily. We have this high, this is the base, and then this is the whole area. And look for what the euro is doing. It's reacting to it. Now, what's got the euro underneath? This is not a good level. It didn't remove. This is not a level, really. It made a higher high, but one of the things are very important. It has to be a level. It has to remove the previous supply zone, in this case, for a demand level to be valid. This is a previous supply zone. It made a higher high, but it didn't remove this, so this is not a level. Look how many candles, like 8, 1 week here, 3, 6, like more than a week. So this is, I wouldn't drop the level like this. This would be silly. It could work, but this is not a level. This could be easily absorbed. Look at the drop from here. When it first dropped, it dropped until here, which is where we have this continuation pattern, and then kept on dropping until here, more or less, and then dropped until here. So we have like classic support or resistance over here on this pattern, right there. This supply, sorry, demand area, like that. And then we've got here two CPs. This one and this one. This is a rally base and a rally base and a rally. 2 piece level, 2 CPs. CP on top of each other. Continuation pattern on top of each other. So this would be the first level, and then this would be the second level. Okay. So now, if we look there, if we zoom in that area, we will see that we have those areas we were talking before. See, with the gap. Level on top of each other. So I'm not going to trade this and set and forget. You see, we are bouncing for higher time frame areas. Look at this and fill gap. If anything, if I wanted to go long, if I was allowed to go long, I would go for the lower one. But look at the lower one. There's nothing here. I mean, this could be easily absorbed, and the trend on 4 hour would be taken out when we have one full candle open, low, close, and high underneath the trend line. So this is part of the strategy. I shouldn't go into more detail. But as you see, too much trading in the area, there's nothing here that stands out, and there is a gap in between, so it's not good. But that's it. So hopefully this will help you to be more consistent when drawing levels. It's easy to do that. I mean, but you need to practice a lot. We've got a level over here as well. See, a rally, a base, and a drop. So again, the rules. This is a vertical line to draw the first leg where price stopped, and this is the second leg. Invisible candle because it's a gap, unfilled gap. This is the lowest low, and then this is the highest of the open and closes of the basing candles as a level. Okay. After rally, hit maybe a higher time frame area, and the CP patterns are not valid when we are against the trend. And that's what happens. Reacted a little bit, but then dropped. No, it didn't work. No, it was reacted, but it didn't make high, so it is not. So well, as you can see, these are the rules. I covered the exceptions as well, and you need to practice a lot. Okay? Thanks a lot for your attention.